What is going on, guys? This is Mando with M Traders, and we're going to be talking about how to do something called a straddle, which is 2-to-1 ratio option call and put. Now, I found very useful information down in YouTube. However, all this information is like very highly technical information, and well, maybe not most of it, but for the beginners, right? The ones that want to say up, down, kind of a dumbed down version on, what strategy is one that I think it's working very well for me. And I think might work well for other people. It's a earnings play that I usually do, which is a straddle, which is a 2-to-1 ratio. So what is that? It's basically where you buy puts, right? You go long puts or you go long calls. So you get both, right? Now, let's say if you think a stock is gonna go up. For example, let's say Google is gonna go up, right? They're gonna have earnings and you think it's gonna have at least like a 5% win, right? Then you would buy, in this case, the 2-to-1 ratio strategy, which is the straddle. You would buy 2 calls, right? 2 calls in would go long 2 calls for Google, and then you would go 1 put Google. But why? Well, I don't know if you guys notice with earnings, they can get pretty volatile 90% of the time. All right, going from 12.97, right? From 12.97 to the low of the day, it's at 8.8% drop, which is very significant. And if you were in the right side of trade, most likely very profitable. Excuse me. So, I mean, kind of the dumbed down version for the people that are just want to start and want to do options. And me, I'm not an expert in options. You got all sorts of all sorts of strategies and settings and things to look at, like the gamma, delta, all that good stuff, which I still, kind of confused at times. But all I know, if I go long a call, is that I'm bullish. If I go long a put, I'm bearish. Very simple. Yeah, you got the vertical spreads. Would you sell a put and you buy a call at the same time, or you vice versa? Kind of give you a leverage. You can buy the stock a little bit cheaper, especially if you want to buy like Google or Amazon and you don't want to spend $25 per stock. You probably can spend $5 per share if you do vertical spread. However, I prefer doing this 2-to-1 ratio. Now, let's show you why. Let's go. I'm going to show you a quick example. By the way, I use TOS for charting. However, I do use Tastyworks for my option trades, because I think it's a little bit easier to put trades and it's a lot faster. And the prices is not bad. $1 to open, 0 to close, capped out at $10. Not bad. Robinhood, yes, you do have that free. Let me tell you something really great about that free Robinhood. I was up $1,100 and I saw 2 cents below the spot price or mark price, 2 cents below. So it should feel, especially if the stock was trading at 115, I went 113 to be on the safe side because I wanted to get feel. I was already up 150%, and guess what? It took Robinhood 10 seconds loading before my sell got filled at a lower price. Instead of walking away with over 1K in profits, I walked away with $300 because of the 10 seconds that was loading. It happened to me a lot of times, right? But again, everybody talks on the web. You get what you pay for, right? So I learned my lesson. I'm going to Tastyworks. The fill rate is amazing. It's pretty accurate. It's pretty fast. I love it. Don't have nothing bad to say. And I used Robinhood for over a year, and I really think I like Tastyworks. Anyways, so let's get back to it. So if you got TOS, if you don't, I highly recommend you get it, especially because you can do on-demand trades. So what's an on-demand trade? You can go whatever that you want and work and kind of, you know, play what if scenarios, right? What if I would have done this? What if I would have done that? What? So let's get really quick to April 30th. So let's go back to April 30th. So by the way, yeah, did you go click on demand? This is where you click the date and the time. And it's April 30th, and it's about, Google's about to hit an all-time high. So I'm gonna play both scenarios, right? So you guys kind of get a understanding of what I mean, right? This is basically kind of paper trading, but not really paper trader. So anyways, so let's say I'm here. I'm at this stage right here, where it's at 1291. Let's get a little bit closer, because usually it starts getting very crazy around the 1445 Central Time for me. And let's say I am bullish on this stock, so I'm going to shoot myself in the foot, and I'm going to go ahead and trade. Make their expirations. Again, I'm going back in time with on demand, and I can do what, you know, should have, would have, could have. And I say, you know what, I'm going to be bullish on Google. I think it's going to go to $1,400. Okay, so current price is at $12.93. So I want to give myself a little bit more space. So it's at $12.93. It's going to go up. I'll buy a little bit outside the strike price, right? At $12.97.50, I think it's going to be good. Even $1,300, I think that's a good price. So let's say I'm going to buy 2. So go here, confirm. 2 calls made their expiration, $1,300, price $21.10. I got the other $20.70. So I bought 2 calls for the next day, expires, you know, or 2 days after that, or 3 days after that, 4, something like that. Anyways, so in order to cover myself, in case it goes south, and I don't want to lose that much money, because that's quite a bit of money. That's $4,000. If you're a beginner trader and you don't know what you're doing, that might kill you, right? But usually for earnings play, this is not a bad strategy. It's not too good if you do a, you know, intraday, obviously because of decay. Now I do recommend when you are doing this type of plays, buy it towards the end of the day because of decay. Trust me, if you were up 1,000 and you know, next day opens up at the same exact mark price or last price, your 1,000 profit now might be 700 profit, right? Again, that has to do with the other various different type of, you know, how an option works. But just know, if you buy and you sell very quick, that doesn't really affect you a lot. Also depends if you buy outside the strike, you know, in the money or out of the money. There's a lot of stuff that comes to play now. But if you're doing an earnings call, right, and or earnings play, let's say I was bullish about 2 calls and I want to cover myself. So usually what I would do, I would buy the one that I buy only 1 or less off. I'm gonna buy it at more expensive spot price. So I will buy this one, so $12.90, because it's I'm only gonna do 1. I'm gonna go do 1 long put. So I'm gonna buy a put. I have 2 calls and 1 put. Well, why? Well, because I cannot read or see the future. So I'm gonna do this. So there you go. I finally made my, I bought my stuff. I got everything that I needed. I'm happy. Now I'm gonna go to sleep and wake up tomorrow and see what happened. Remember, I got 2 calls, 1 put, and we're gonna go to April 30th. It's gonna be 0835, because I think 22, 34. I think that's when the options get active. There you go. Oh my God. My 2 calls. If I was in for 2 calls expiring the May 3rd, I'm out of the money. That money is completely lost. I lost it forever and ever. Amen. But I bought 1 put to cover myself. So let's see, what my 1 put would gotten me. Usually I would wait, after a big drop like that, it will continue to drop or it'll continue to go up depending on what you have, right? Okay, I think this is good around this time, even if it's 9:35, it stay around this level. So if you were to sell or wait or whatever, let's go look at your options. Ah, that's right. Even though it's fake money. There you go. There's what happened. So guess what happened? I bought 2 calls, right? So 200 shares of Google, and I bought 1 put, and it went south for me. So I didn't make money. No, actually I did make money. So this is right here. This is how much I made. So my total investment on my call options were $4,125 or somewhere around that area. And I had only bought 1 put, which was around $2,300. Now that 1 put is actually now worth $7,935 minus the 4,125 gives me a profit of P&L of 3,800. So I had 100,000 total. So just to give you guys a good, paint a picture for you guys. So what happens once I sell? So I went and sold. So out of my 100,000 original investment, I bought 2 calls, 1 put. It went south for me. You probably would have lost money. I actually made $3,874. I started with 100,000. I made $3,000 profit on top of my original investment of what I had. So it's not a bad thing, right, guys? It's good to cover, especially if you don't know. If you feel lucky, it's going to casino, play red or black, and then you get green. It's type of, those type of scenarios. And this one, at least, it gives you a little bit of peace of mind if it goes south for you. Because usually earnings are very volatile, and this is a good option to kind of play around them, right? Now let's go ahead and go, let's play the winning side now. We're gonna reset our account. It's at 100,000. It is April 29, and let's change it to 12. Now we're back around this area again. This is time decay kills you, so it's not 12. I meant 1447. And there you go, and it drops. Okay, anyways, so we are here and we're gonna play the winning side now. So let's say I was bearish for this. So first things first, make third. Let's play this one. So since I'm only gonna buy 1, I'm gonna go to the most expensive mark price or spot price, however you guys want to call it. I'm gonna buy 1. This is for the people that don't have much money, but you want to kind of be safe on how you play. So total investment, cost of trade, 2360. However, I get filled at 2335. So that's probably about 2,350. with $35, something like that. All right, so I got Phil. There's my one call. This is how I'm gonna cover myself in case it goes south for me. And since I bought this one at the most expensive price, I gotta buy one at a cheaper price. So I'm gonna buy my puts $1 below, around that area. We're gonna single, and we're going to buy 2 puts. And remember, this one I'm pretending I don't know nothing, and I pretend that it's gonna go down. But I have my one call to make sure it's okay. So let's see here. So right now I'm at profit of 50 bucks, right? It's not bad. Overall, I have invested probably around $7,000. And I'm gonna go show you the charts. It's still, if you guys look over in this area right here, when I go here, it is 429. Now we're gonna go over to 430th. It's gonna be 0.849. Why not? Boom. Here we are. It dropped. It actually went for us. The one call option that I had, it completely is worthless, and it's only gonna be worth something if it goes up. Remember, I have very close expiration dates because I want to have them I want to play something that's quite cheap, because the further you go, the most expensive it is, and I can buy more of. So let's look at our account now. Oh God, it actually went our way this time. My total investment on my one call was $2,375. I have a total profit now of $12,537. So if I was to, first you wanna close your winning one, right? And if you guys wanna hold the losing one, because you already lost your money. Remember, you only lose whatever you invested in the option. So if you guys want to hold it, all power to you. You cannot lose more than what you invested. So that's the beautiful part about options too. You know what you're gonna lose from the get-go. That's basically it. So I can leave this here. If there's a miracle and it bounces back up, I don't know, in the next 3 days, kind of like what it did towards Friday. It went back to 1190. I think it reached 1190, which was great. It recovered significantly. However, I'm already here. I'm up a total of $12,525. There's my strategy. This is a earning strategy. Again, it's not for intraday. I do not find value in intraday. I do find it in earnings. Buy it, 30 minutes before market closes. So, kind of evade decay in prices. If you guys do not believe me how decay works, I'll show you in another video, but it's a significant loss of profit. However, if you play like that, it's actually not bad. This is just, I play Google just kind of to show you. Now, you guys, if you want to, go back in, look at other trades that you might have, traded, and see what would have happened. Will you get a winning always profit? That would be great. But there's some of them that I tried where I broke either close to even, or instead of losing $5,000, I only lost $300 because of the 2-to-1 ratio. Which again, it's not bad if you can limit your losses that way. You also you limit your losses by doing the vertical spreads. However, if it goes south for you, you just lose. There's no chance of even getting any money out. So this is the way I play it, earnings, and actually it works. If you guys try Melly. Melly was another one that had good earnings, and it went up like $100, much more, 20% on it went 20% on the for the day. So it went up 20% on Melly, which is MELI, Mercado Libre. And if you were to play that, the 2-to-1 ratio, you probably would have made a lot more money. That's 20%. That's wow, right? It's kind of like playing penny stocks, but with blue chip companies. So anyways, hopefully you guys do like this video. you guys did found this somewhat useful, especially if you're a beginner in options and you do not know what you're doing. I think this is a great strategy, one of the best strategies there is when you want to play earnings. Again, this is not an advice. This is the way I do things, and I wanted to share with everybody else to see what you guys think, and hopefully you guys can start making some money, being profitable. If you are, want to join our chat, go ahead. It's on the description below. We have our link to Discord chat. We also have, like, for stock traders, if you're also starting and you want a big leverage, we have TradeNet, which you can also join, and it's the affiliate links actually at a discount, so you get, like, I think 10% off or 20% off, something like that, if I'm not mistaken. Also, I got other links that you guys might find useful, so please, again, do sign in. I mean, not sign in, subscribe, click on the little bell, so anytime I post a video or go live, it's gonna trigger you to say, hey, Armando is live, so there might be something useful. Again, all I'm doing this is just to help everybody else, right? It's us versus them, basically, and them being the big companies, the corporations, the hedge funds, all of those. There's only one of me, one of you. So anyways, hopefully you guys did find it useful. It's actually a great strategy. Go try it with on demand. If you don't believe me, try how would have played out if you were to play those earnings, right? So again, hopefully you guys like it.